We've talked about the scope of financial management, which is about financing activities and investing activities and asset management and ultimately financial analysis. Now, one by one, we are going to take up all these activities and see that what is included in each of these activities. So the first discussion is about financing activities. As I mentioned in my earlier discussion, that financing activities are about arranging finances for a business organization. And when we talk about arranging finances, we need to look at the sources of financing. Source means from where we'll get money. पैसा हमारे पास कहाँ से आएगा? And when we look at those sources, we say that we can classify those sources as external sources and internal sources. But mainly, when a business is to be initiated, when a business is to be started, there are no internal sources because it's a new business. So at the beginning, we have got only external sources. So when I classify financing activities, I classify them into number one, external financings and internal financing. And external financing is the one on which a business has to rely mainly. Now, what is included in external financing and what do we mean by external financing? That is external to what? There is a concept in accounting which is called the concept of separate business entity, and we need to know it very well, that every business organization is different from its owners. That is, if I own a company, I'm not the company myself. The company is a different entity and the business is a different entity. So anything which is not a company is external to the company, meaning that the people who are the owners of the company are also external to that company, और उनसे दिया गया पैसा, उनसे प्रोवाइड किए गए फंड्स कंपनी के लिए external source है. So in this external source of financing, we have got two major sources. The first one is the sources, the funds which are provided by the owners of the business. When it's a small business, obviously it is the person who is doing the business. When it is even a little bigger business, चंद लोग मिलके कर रहे हैं, तो ये एक पार्टनरशिप की शक्ल में है. तो वो लोग जो पार्टनर्स हैं, जो पैसा प्रोवाइड कर रहे हैं, they are the ones who are contributing in this. But when we talk about a corporation, as our course will be mainly focused to, so here the equity providers are the shareholders, the people who purchase small components of equity. And other than equity, we have debt. Debt is a loan. Debt is the amount that we are taking from some sources who are not the owners of our business, who are the lenders to the business. यानी हमारा उनके साथ जो ताल्लुक है वो borrower और lender का बनेगा. वो हमें पैसा देते हैं, फाइनेंसिंग देंगे और हम उनको उसके अगेंस्ट रिटर्न के तौर पे इंटरेस्ट या उससे मिलती जुलती कोई चीज देंगे. फाइनेंसिंग के अंदर जो अगली चीज हमें देखनी है, that is the time period of financing, meaning the financing can be short term and long term. So should we have long term financing or short term financing or a mix of long term and short term financing? And by the way, when we say that it is long term or short term, the line that differentiates the two is 1 year time period, meaning that if financing is for a year or less, then it is called short-term financing. And if it is for more than a year, then it is called long-term financing. The needs of the business are different. Some of the needs are short-term and some of the needs are long-term. So accordingly, the finance manager has to see whether the requirement suits to a short-term financing or a long-term financing. Accordingly, it is determined. There is a difference between short-term and long-term financing, and that is short-term financing is generally cheaper, meaning that the cost of financing is lesser. I have used the term cost of financing. Cost of financing means that the return that we have to pay to the people who are providing us this financing. If a person who is giving us funds as equity funds, that is, कोई shareholder बन के हमें पैसा दे रहा है, then the return we are giving to the person is called the profit that is distributed. The term we use for it is dividend. और अगर कोई group, कोई बैंक, कोई organization, कोई person हमें पैसा दे रहा है as a lender, then the return that we pay to that person or the institution is what we call interest or markup, and in some cases it is also profit sharing. But if it is long-term financing, this return is higher, and short-term financing, this return is lower in percentage. So if an organization is having more long-term financing than the need, then obviously we can understand the firm or the company has to bear more cost, which is obviously not the desired objective of the organization. By the way, I mean, as and when we'll progress, we'll see, we'll talk about it again and again, that the prime objective of every business organization is to make profit, is to enhance its returns. It's to, increase the wealth of the organization. And keeping this objective in mind, all these activities are to be performed and all these decisions are to be made. So, long-term financing costs more, so it should not be taken more than our requirement. And when we'll move to the discussion on working capital, we'll see that working capital in itself is a short-term requirement. So anything that we need for working capital is short-term. And the last term that is in this financing activity part 1 is the cost of financing. I've already touched upon it. So cost of financing is the return that we have to pay to the fund providers.